Welcome back. Autodesk out with earnings last night, reporting an increase in its first quarter sales, raising its full-year revenue guidance, despite, of course, that macro uncertainty. CEO Andrew Anagnost joins us now. Andrew, on the call, your CFO indicated momentum continued February, March, April, right into May. I wonder, given that macro uncertainty we talk about, are you surprised that you continue to see strength in terms of the order book from your clients?
Yeah, David, thank you. Thank you for having me, by the way. Look, we had a great quarter. We beat on revenue. We beat on free cash flow. We beat on billings. We beat on non-GAAP operating margin. And we did that all in what you call, clearly an uncertain environment. We even saw that momentum continuing into the second quarter. So we're really proud of the results, but notice we did flag that there's uncertainty out there. We're not seeing it yet. We didn't see it in our first quarter. We're not seeing it in the beginning of our second quarter. But, we're looking at the second half of the year and we see clouds.
You do see clouds. All right. I guess my question was, are you surprised you haven't seen it yet? Or what are you hearing from your clients then in their willingness to continue to spend with you and perhaps not pull back given of the uncertainty that is out there?
Here's the thing, David. Our customers are definitely dealing with the uncertainty. We hear it from them all the time. But what's not going away is the capacity challenges they have. We still have infrastructure that has to be built and rebuilt. We still have housing supply shortages in the United States. We have a construction backlog of 8.6 months right now. People have to build. They've got projects they have to execute. They have supply chain pricing uncertainty, but what they're looking to do is find certainty in an uncertain environment, and that's what Autodesk sells. We sell certainty in an uncertain environment. We provide them systems and processes and capabilities that allow them to predict things more reliably, deliver more on time, deliver on budget. So we give them tools that help them manage the uncertainty of the times. That's why you're seeing them continue to buy. They're planning for the future.
Right. All that said, your CFO, when it came to your guidance, did say on the call that you assume new business growth for the rest of the year decelerates. And I think he said at roughly the same rate as during the pandemic. That doesn't sound that good.
Yeah, so what we did is we put some prudent guidance in there to make sure that we didn't find ourselves looking back and saying that some of the risks that we saw coming, we didn't put into our guidance. Some of those things might not materialize. If they don't materialize, the business will do better. But what you saw was we actually raised our full-year revenue guidance and our full-year margin guidance, including some of that deceleration in the second half. So we essentially de-risked the full year, and that's pretty much a positive outcome for this kind of climate.
I feel like, Andrew, we should also just talk about who your clients are and what exactly you do, which is specifically around engineering, architecture, construction, the housing market, and some of what you're seeing in those trends and the increasing, I guess, digitization of that entire industry, which I think has been slow to adopt, and how that could help offset some of these headwinds.
Yeah, exactly, Sarah. This is what I was saying. Is our industry has a capacity problem. There's not enough people. There's not enough money. There's not enough material to build and rebuild everything that needs to be built and rebuilt. As a result, the industry has been progressively and increasingly investing in digital technologies to drive productivity and actually get ahead of their capacity challenges. And look, we're seeing an acceleration and reshoring of manufacturing capabilities. That manufacturing capacity does not yet exist in the United States, for example. It doesn't exist in parts of Europe as well. They have to rebuild that capacity, and they have to rebuild it smarter. They have to build it digital. They have to build it AI first. That's what's driving people's purchasing. That's what's driving their outlook. They're looking towards the future and past the noise they're seeing right now.
So how do you get the growth going, at least, or get the stock going? I mean, we were talking about it. Hasn't moved that much. I'm looking at back 5-year chart, a little bit higher from there, but it's kind of been sort of stuck in this range.
Yeah, the last year we've been doing actually really well. Remember, we went through a series of important business transitions. We moved from billing multi-year contracts up front to billing them annually. We changed our whole relationship model with our partners. We moved from buy-sell models to commission-based models. All of these were things meant to modernize the company and allow us to more effectively sell SaaS-based software powered by AI. Those things were kind of noisy. We're past those things, and what you're seeing is our free cash flow is building up. Our industry sectors are starting to invest more in the technology, and we've moved past some of these noisy things that made Autodesk hard to understand. So look for us to continue to build free cash flow growth and continue to kind of deliver these great numbers that we delivered this quarter.
about a month ago or so that you did add 2 new board members, settled that fight you had with the activist Star Board. Are you happy with your board members? I assume this is the first earnings with the composition and the new board underway.
I'm really happy about the settlement we had with Starboard. I think it was the right thing for the company. I think it was the right thing for Starboard, the right thing for our investors. We added 2 indisputably independent investors, Christy Simons and Jeff Epstein. I'm happy to work with them. I'm excited to work with them. And I'm excited to move forward constructively with all of our investors.
All right. We're going to leave it there today. Andrew, appreciate you taking the time. Thank you.
Thank you for having me.